All right, guys. Today we have CPI inflation data. It's honestly a really big day. We're going to see whether we're going to cut rates, I think, next month today, depending on how high the inflation data is. If we get low inflation, it's pretty confirmed we're probably going to cut. If we get high inflation, it's going to potentially push back the odds of rate cuts. So it's honestly a really important day. We'll get a timer up. Let's get a poll going live. What's up? Real, Marco, Andy, Pawn, Michelle, Fender, Reish, JP, Blue, Ryan, Ava, Ray, Bad. Hey, what's up, guys? Good morning. This today's CPI inflation data coming higher or lower than the, what are we expecting? I think year over year we're expecting 2.8%, which is actually a slight uptick versus what we showed last time. Yeah, year over year we're expecting 2.8%. Last time we showed a 2.7%. We are expecting like a small uptick year over year. See what we show. All right. Here we go. We got that data up. Yeah, I think the market's kind of muted today. We had a lot of big stories come out. So number one, let's talk about the biggest news, which is the US China tariff truce extended for 90 days, which is what I told you guys yesterday. If you guys remember the morning stream, one of the things I said was that they were probably going to push back tariffs until November, another 90 days. And so if you look at that, what's 90 days from today? It's November. And so, yeah, the president signed an executive order delaying the scheduled tariff increase on Chinese goods, maintaining the 30% tariffs currently, averting a jump to as high as 145% if they didn't extend another deadline. The new deadline is now set for early November 9th, according to most reports, November 10th, according to some other ones. Initially, the markets reacted positively, especially Asian markets. Japan's Nikkei index hit record highs. China's Shanghai Composite and Australia's ASX 200 also went up. But again, markets are kind of flat right now. They're not really moving. I told you guys this is kind of the behavior of stocks and futures and finance ahead of big economic reports. And so what I see, honestly, with us being so flat, what I see is apprehension. I think we're just apprehensive leading into the CPI inflation report. So major chip makers are also under pressure this morning due to new U.S. revenue sharing arrangement, again with AMD, Nvidia, and others. Automakers like Li Auto are slipping in pre-market as markets remain jittery ahead of tariffs. Analysts like Peter Cardillo caution that this move signals a potentially difficult road ahead for negotiations. Semiconductors and export sensitive stocks are likely to see volatility potentially. And yeah, that's where we're at this morning. We got a delay in China tariffs. As of now, taking a look at rate cut odds for September here. This might be a Christmas song, but I kind of like it, so I'm going to leave it up. Odds are actually decreasing a little bit. So the odds of a September cut have gone down. We are at 82.4% right now. And if we get higher inflation data today, if we get higher inflation data today, these odds are going to decrease more. And the odds of a pause next month are going to increase. Right now, we're about 17.5%, 18% likely that we're going to pause. And we're about 82% likely that we're going to cut. But these odds are subject to change, especially regarding today's inflation report. One of the things that probably push back these odds is the China truce as well regarding tariffs, the extension, another extension. So what's up, sweet? How much chances for a rate cut in September? Yeah, 82% as of now, but it might change. You know, if we take a look at like Trueflation as of now, right around 2%, right around 2%, for Inflation US inflation index. I'll show you guys a picture of this. Yeah, so I'm looking for the CPI. CPI for Trueflation, they have it at 2.7% as of now, about 2.7%. PCE, they have it at 2.6. The BLS Consumer Price Index, they have it at 2.7. Producer Price Index, they have it about 2.4%. So we'll see. Which office puts out these numbers? Well, these are mostly different banks. Let's go through the expectations here. All right, so look at the NASDAQ. NASDAQ dipped out. I think we're going to be maintain choppiness leading into CPI. Okay, so the consensus is 2.8%, up from 2.7% in June for headline CPI. MarketWatch references 2.9% year over year for headline CPI, although I'm showing MarketWatch at 2.8%. Consensus for core is 3.1%. Year over year for core CPI compared to 2.9% in June. So it's expected to jump up 0.2% relative to what it was the previous month. Reuters notes an expectation of 3% year over year for core CPI. So a little bit lower the expectations from Reuters. Month over month core CPI expected at 0.3% month over month. FX strategists predict 0.4% month over month. So it depends on who you look at. These are different analysts, not banks, but analysts is what I should have said. Yeah, let me get a timer up. Let me refresh this here too. Yeah, I got a timer up. I got you guys. Hold on. Yeah, it's a big day. It's a big day for CPI inflation. I'm ready for it. We got an hour and 6 minutes left, roughly. A little bit less than that now, actually. Yeah, so here's the timer. Hey, what's up, Beach Bum? What do you think about Tesla and must new pay? Don't do it, Hopa. Don't do it. Yeah, we're going to be streaming the entire thing. The economic report, the data release, all that stuff. So... yeah, we have some earnings this morning that came out too, now that I look at it here. We had Circle sometime dropping before the opening bell. I don't know if they're out with theirs yet. You can maybe look at Circle to see if they've moved at all. Yeah, they're up. That means their earnings are out. Probably came out early this morning. Let me just take a look to see what Circle showed. Okay, yeah, so Circle did drop their numbers. Circle dropped 43-cent loss per share versus 46-cent loss per share estimate. Adjusted EPS excludes 435 million stock-based compensation. Sales came in at 658 million versus 540 million expected. So way better sales than expected for Circle. And it's up a lot from this too. Yeah, Circle BDPSB revenue is up pretty big. Dropped these early this morning. Or actually, it looks like maybe Circle. Yeah, this came out like an hour ago. Yeah, Circle's up big. All right, so let's look at Trueflation's data a little bit more. Where about Trueflation? Let's go. And again, if you take a look at rate cut odds, we can take a look at yields. Reuters thinks headline CPI month-over-month is at 0.2%, down from June's 0.3%. Core is expected to be at 0.3%, which will be the largest monthly gain since January. Yeah, so we did have some earnings this morning. Again, CPI is dropping later today. It's a big report. Evergrande is going to be delisted in Hong Kong. This is a real estate. Yeah, so Evergrande delisted in Hong Kong. I'm looking at some other breaking news here. And again, maybe I'll attack some choppiness leading into the CPI report. But if you look at the NASDAQ, we're down a little bit, slightly red on the day for both the S&P and the NASDAQ. Nvidia slightly red on the day too. But they're mostly pretty flat. Like, we're not really moving that much here, to be honest. Yeah, China did extend the 90-day pause to tariffs. You can read that at the bottom scroller. Higher or lower CPI is going to be better for rate cuts. RIP. So he said, is higher or lower CPI going to be better for possible rate cuts? Lower CPI is better in order to cut rates, which is a economic stimulus, a more economic stimulating thing, I should say. In order to cut rates, the Fed needs justification for it, and so you need weak economic data, weak labor market data, I should say, and you need lower inflation. Like, you need price stability in order to justify rate cuts, because if inflation's really rampant, it's a much riskier thing to stimulate the economy, because then people spend even more and prices rise even more, right? So in order to justify rate cuts, you need price stability, you need low inflation. And so that's why, like, right now odds are 80% plus that we're going to cut rates in September. But if we get higher inflation data today, it's noticeably less likely to cut rates, in my opinion, depending on how high the inflation data shows, as well as what PCE inflation reflects, right? PCE inflation, a very important metric that you want to tune into as well. It's the Fed's preferred inflation metric. It comes out a little bit later this month, but CPI inflation is important, relevant, and you want to watch it. You want to pay attention to it. Yeah, Circle also announces stablecoin payment blockchain ARC. We had Cardinal Health come out with some earnings. Hey, thank you, Sam. What's up, Sam? How you doing, brother? Evergrande, yeah, it's a Chinese real estate company. So people use the Evergrande company to gauge real estate in China. Cost of living is too high to start. Yeah, I mean, I agree with you. Follow says normal on average people are being phased out. The cost of living is too high. Basically, inflation's too high. And I understand. What you have to understand though is that prices are not they're not going to go down unless we enter a deep recession, and they're not going to stay down even if we do. And so essentially the best we can hope for is close to break even months or years regarding inflation to let like income catch up to it. You know, if things are too expensive, that's all we can really hope for. And so essentially the only real way to combat this is invest to hedge or make more money, because prices don't go down, bro. They most prices don't. Food and energy can, because those are based off of more volatile like things. They're a little bit more nuanced and based on more volatile things. But everything else, prices aren't really going to decrease. Rent might slightly, but it's not going to stay that way. Real estate might slightly, but it's not going to stay that way. And so that's kind of something you got to understand. Is that once prices go up, you're stuck with it. And that's kind of what people have to understand about inflation, is that inflation doesn't really literally decrease, it slows. And so if we could slow inflation down and have a couple close to break even years, that's a win. That's a W, you know. But if you're waiting for prices to literally go down, you know, it might be a long wait. Yeah, ETH has been having some big, powerful moves up. Yeah, 100,000 is not as much money as people used to, you know. People used to flex about 100K. 100K is not that much anymore, unfortunately. I mean, it depends. 100K is plenty to, like, live and, like, you know. August is the most bearish month. I don't know. I think September is, which is, I think September is, but I'm not 100% sure. I might take a little trade here, just attacking chop. We'll see how it goes. It's going to be small. Oh, dude, did we just pull back as soon as I said that? I was going to short right here. I just missed it. All right. We're going to jump in here and then maybe add to this. We're keeping it small. We're keeping it small. I just think we're going to chop today. I think the market's going to be flat leading into the inflation report. We got an hour left. And so I think, again, I'm not an investment professional. I'm not liable if you lose money, you know. Understand all the stuff on the screen. I can't guarantee anything. Don't copy me. Not an investment professional. Not liable if you lose. Make your own assessment. Figure it out. Can't guarantee anything. With that said, though, let's see if we can make some money in this trade. Very small. We're going to cover all the other breaking news too here, but Intel's moving in pre-market this morning. All right, we just took half of this off. Look at Intel. We'll hold the rest break even now. See if this breaks down some more. Chop sideways. Yeah, Intel's up pretty big after, I guess, they bet with the Prez yesterday. Yeah, so I'm looking at most months. September is typically the worst month. It depends on which data you use for it. There's a lot of different, like, here, hold on. There's a lot of different metrics you could use. September is typically, it's called the September slump. August is hit or miss. August can be good. Other times it's not. And so it's hit or miss. September is the month where it's like, that ain't a good month, really. All right, so yeah, September, like, look, just to show you a couple different graphs. This one's from Business Insider. This is the average stock market performance since 1915. I don't know what the max date is here. Here, hold on. I gotta watch this trade. I was supposed to hold it break even, but I want to let it test a little bit. Basically flat here, but you can see September is actually one of the worst months at an average negative 1% in September. Average decrease of 1%, almost 0.1%, 0.9% is what this one's showing. August actually has almost a 1% average gain, but that's medium relative to the other months. So we'll see. Paramount. I think Paramount's interesting, but I don't know. We'll see what the UFC deal does for them first. Yeah, I was trying to hold this break even, but it looks like it's going to try to retest this top of the range. See if it slumps back down. Yeah, we're out. We're basically flat on the day now. The dollar index is down since last CPI. That's really bad. Yeah, I mean, most in bull runs, yes, 2017, 21. Are you talking about crypto or stocks? Most, like, just to put this into perspective, stocks are mostly green every year. Not always. You always have, you obviously have bad years for stocks, but stocks are green almost every year, you know. So yeah, so July CPI year over year forecast 2.7%. Economists expect to hit 2.8% from 2.7, core to edge up to 3.1 at 3% is what they're expecting today. Yeah. All right, so we did tap the 200 exponential. I might short this now again. Let's try. Right there at the 200 EMA. See if we can creep down here. Tibet. Hey, I'm doing good, man. What's your opinion? Keeping your money in a savings account or stocks? I mean, that's such a subjective thing. Follow. He said, what's better, keeping your money in a savings account or stocks? So subjective, right? It depends on what your risk tolerance is. There's more risk in stocks, but you're gonna have a higher average yield in stocks usually, versus a savings account, which is going to be generally like much lower yield in a savings account, but it's going to be safer there, you know. So it depends on what your risk tolerance is. If you're holding, in my opinion, and I'm not an investment professional, I'm not liable if you lose money, make your own assessment, figure it out. But if it's me and it's long term, like I'm holding for years, I'm putting my money in stocks, or I'm putting my money in indices, whatever you want to say. NASDAQ, S&P, Dow, and I'm just going to leave it there for a period of time. All right, so we just cut that trade. But yeah, that's what I would do, personally. Everybody's a little different, but you can do money market. Money markets can be a little bit safer. They're mostly going to, you know, pay out what bonds pay, you know. They're not bad. They have some benefits for sure. Ideally, you want to diversify into a bunch of different stuff, I think. But everybody's different. If it's long term, I'm putting my money in stocks mostly. If I've got decades until I got to retire and the money's for retirement, I'm going to stick my money in indexes or stocks, because those are going to have the highest yield over that period of time, and they're safer. The longer you zoom out with stocks, the safer you are in theory, right? Like, the S&P average is 10% a year, 8%, 9%, 10% a year. So does the NASDAQ, so does the Dow. And so the more you zoom out, the safer it is. generally, but there's always risk. Like if you get caught in a bad time, you get caught. But again, I've always said this, the biggest losers in market crashes are people who get emotional and sell. Sell after the drop is what I mean. Like sell like after a big 10, 15, 20% drop. Those are the people who do the worst. The people who do the best are people who pick up discounts during those periods of time and kind of average in or DCA or whatever you want to do during the pullbacks. And so if you got time on your hands, you just got to wait a year or two and let that phase out, and then, you know. Yeah, I'm looking at Bitcoin. Bitcoin looks great. You know, it's at 118s, but it's moving close to all-time highs. I like crypto. I'd put, you know, again, I'm a big believer in diversification with this type of stuff. Like put a little bit in crypto. Like I'm in Bitcoin. I'm in like XRP. I've got a little bit of Doge. I've got some other stuff too, but I'm a big believer in diversification. Where's AMC and GameStop at right now? Apple down, AMC down, GameStop down. Yeah. Isn't gold the safest? That also gives pretty good returns. Gold gives good returns. I think gold is up what? And gold is up like 10x in 20 and 25 years, so it's 10x. The problem with gold is it's less consistent generally than other like gold generally pushes up, but when it downtrends for a long time. If you look at gold here, I don't know how long Top Step X is gonna let me look at it. I'll put gold up on this right chart here. Here's gold. Right, the problem with gold, I think sometimes, is that when you look at it here, gold uptrends for a long time, but when it downtrends for a long time. Like look, gold downtrended here from 2011 all the way to like 2016 to 2019. That's almost like a decade. Or that's like a 7, 8 year downtrend. That's a very long downtrend for gold. And then gold's been pushing up a lot and keeps pushing up. And so I like gold, don't get me wrong. And I think diversifying into a little bit of everything is the move. That way you capitalize on big moves from gold and crypto and stocks, but you're not too weighted towards one thing in terms of risk. So I hope that makes sense. Let me squeeze this on the page a little bit here. Hold on. There we go. Well, you can actually see where gold's going. Well, yeah, what percentage do you think CPI shows up as? We did a poll. 55% think CPI comes in higher than expected. 24% think lower than expected. 21% think as expected for inflation data today. Gold and crude are really good for trading. Yeah. Yeah, crude can be predictable. What percentage do you think CPI, headline CPI, is going to show up as? Put it out in chat right now. I see 2.5% from somebody. The 2.5%. Lower than revised up. 0.9%. Just to put this into perspective, it's expected at 2.8%. So we'll see what it shows up as, but it's expected at 2.8. .7 for sure, 2.8, 2.4, 2.8, 2.7, 2.8. So y'all think it's mostly going to come in as expected today at 2.8%. I don't necessarily dislike that. Can you share your opinion on investing long-term in indices or your practice of attacking dramatic reactions and drops, increases of an individual stock? What have you found more lucrative? It depends. Like, they're both pretty lucrative, I think. Like, again, I honestly, what I do is a mix of both. So what I do is I look for stocks that pull back big on earnings and that have big pullbacks, and then I try to hold them long term if I can. I usually take some profit on like a lot of the time a stock will drop 10% from earnings. And if it's a good company and the earnings are mixed, then I can justifiably buy that dip, and a lot of the time it's going to rebound back up 3, 4, 5% within a day or two. And so usually what I do is I'll take like a position, and then when it rebounds that 3, 4, 5%, I take like anywhere between half and 3/4 of the position off, and then I just let the rest sit long term. And it can kind of go up, and sometimes I'll add back if it looks good, and you know, manage it that way a little bit longer term, and then sometimes I'll just hold them indefinitely long term if I really like the company. And so it's kind of a mix between swing trading and investing, where I'll take some profit like a swing trade, but I'll also hold on to some of it like an investment. And so it just depends on what stock it is, though. Every stock's different. I don't really like holding on to some stocks. There's some stocks where I think they might bounce short term, but I don't like them at all long term. Fashion companies, you know, trendy companies, stuff like that. I'd rather not sit on those long term. .7%, 3%, 2.8%. All right, what do you guys think core CPI is going to show up as? This one's actually, anyway, last time showed up at 2.9. They're expecting 3 to 3.1% today. And again, these are going to influence rate decisions. So they're expecting, again, 3% for some analysts, 3.1% for others. But again, I'm not an investment professional. I'm not liable. Don't copy me. Yeah, we had a bunch of earnings released this morning. Circle came out, but all right, so we're gonna do a poll here as well. Hey, what's up, Faye? 2.7% and 2.9% for core. I mean, I think that'd be pretty good numbers. If we show up at 2.9% for core, that's going to be lower than all the analysts expected for the most part. And 2.7% is lower than the headline expectation as well. So that'll be good, I think, if we show up at 2.7 and 2.9. Someone tell me gold goes up or down. Gold, okay. It's not really inflation data that's going to influence. It's kind of an indirect move. Gold goes up if the Fed's more hawkish, generally, but it's not always kind of that easy, I would say. I'm not personally feeling inflation pressure, so maybe it'll come in lower and surprise everyone. Maybe. If it comes in lower, it's going to increase the odds of rate cuts. I think that's a good thing. I think this inflation report is a little bit more important. I also think it's a little bit more polarized this time. Like, I think it's much more polarized this time in terms of, I think lower is going to make the market go up most likely, and higher is going to make the market go down. And it's not always the case. Sometimes we get low inflation, the market goes down, and vice versa. And so I think higher inflation is going to make the market go down, and lower inflation is going to make the market go up, just because lower inflation means much more increased odds of rate cuts. And so that's my personal opinion. It's just an opinion. It might be wrong, but... And again, you guys know Jerome Powell, incredibly hawkish this past meeting a couple weeks ago for the Fed meeting. Very hawkish for Powell. Very restrictive, I would say. Didn't want to cut rates. Wanted to play data dependent. And here's the data today. So, we'll see. Yeah, but he was very hawkish. He was much more hawkish. I thought he would pause but be dovish. Like less restrictive, like kind of balanced, like pause but be dovish. Maybe NQT, which is a less restrictive action, a dovish action. But he was kind of the opposite. He paused and was really hawkish and kind of restrictive and data dependent and didn't want to cut rates and didn't know if he would cut rates this year and all this stuff. After that terrible jobs report, though, the reason when things changed over the past few weeks, it was when last Friday, not this past one, but the one before, the labor report, non-farm payrolls, unemployment showed up way lower than expected for this past month. But also, they revised the 2 previous months before that down almost 260,000 jobs down. And so they reduced the actual count of jobs down almost 260,000, and that made the market freak out. That increased the odds of rate cuts dramatically, where it was like 30%, it's now 85% right now. If we take a look at it, it might have changed since I looked at it this morning, but the odds of rate cuts have certainly changed. And so yeah, you can look at it now, 83, 82% as we speak here. Gold's starting to go up and the Nasdaq's starting to come down. That 200 exponential short, I should have held a little bit longer. It's pretty impressive how stocks are pumping with how Powell. I think they're pumping on expectations of rate cuts, though. I mean, they're both biased, so it's not just one of them. Like, listen, the president wants lower rates so he could say, look at what I've done. Look at the thriving economy I have. But a thriving economy is not always the good move. And I think we're somewhere in the middle. I think you could probably justify rate cuts, though. And I've said that a couple times. Like, I think you could probably justify them. But it's not that easy of just cutting rates just to do it. Like, we already cut a percentage point last year, and we're still moderately restrictive right now. And I think it's probably time to start bringing them down based off of that last labor report, though. Yeah, the cost of a house in ounces of gold has remained fairly consistent. Yeah, and I mean, this is considering we got off the gold standard. You know. Yeah, so we used to be on like a precious metal standard. You know, from 1850 to 1889, we had $1 gold coin. It was 90% gold and 10% copper. We had a $2.50 quarter eagle, which was 90% gold and 10% copper. We had a $5 half eagle, which was 90% gold, 10% copper. Pre-1965, they had silver and dimes, quarters, and half dollars. You know, nickels used to have copper in them, which, you know, probably would have gone up as well. And so if those went up with the prices of precious metals, or I guess nickels still have copper, sorry, but copper's not really a precious metal. But if we still had silver and gold in our coins, they would be worth way more right now. So I think a lot of people blame that for inflation too. Yeah, they're copper and zinc right now, most of them. Can you imagine no rate cuts in September? Yeah, I mean, September, I think it's pretty, we're going to figure it out today. Today's inflation report is going to influence whether we're going to cut rates in September, I think. So, we're going to figure it out today, for sure. Yeah, so we're gonna figure it out today. Today's rate cut today's rate decision incredibly important. Or today's CPI inflation report incredibly important. There's a couple other reports that we got this month before September that are gonna make it important as well. Not only do we have PPI inflation the day after tomorrow, we have jobless claims unemployment retail sales on Friday and more. But not just that, but later this month we have PCE inflation, which is what the Fed looks at to gauge inflation. Number one, we have PCE inflation. We have another non-farm payroll and unemployment report dropping this month sometime as well, right? So those two reports, aside from today, are going to influence whether we cut rates in September. At this point, it's probable, but if we get high inflation data today, the odds for rate cuts are going to decrease, not increase. So today's important. Yeah, PCE at the end of the month. And sorry, the next non-farm payroll unemployment report is going to be at the beginning of next month in September, so it might have an influence. President wants rate cuts, but he doesn't want 401k old boomers to sell the market due to bad economic jobs data. Yeah, I mean, I was telling people, like, look, if we end QT, especially for MBSs, it might make house prices go up. Interest rates going down might make house prices go up, not down. And so if it's about affordability in housing, it might have the counter effect, but it will open up the mortgage market a little bit more for people, which is something that people are pushing for as well. I don't know, Faye. I think it's somewhere in the middle. I think, I don't know. I don't necessarily, I think it's somewhere in the middle. I think, the jobs number being revised down so much, like, you know, I think they need to change how they do it. You know, if they're missing by that big of margins, you know, like they're missing by like what, like 80%. They said 100 and then it showed up at 20. You know, if they're missing by 80%, if they're only 20% accurate on that data, they need to change how they're pulling it in some way. You know, the delayed polling way they do it doesn't work, and it lags way too much for economic reports. I don't know if firing the head was the right move to compensate or to deal with that, but they certainly need to change in how they pull it, because wildly inaccurate, you know. Right, but why not give it to us straight? I mean, I think the whole point was that they were mad that originally they didn't give it to us straight, and they said it was much lower than it was, or they said the labor market was much stronger than it was, which probably pushed back the odds of cuts. And again, remember, I'm not really partisan here, but I understand people being in general, not even the president, but I understand people in general being frustrated we didn't have accurate jobs data for the last 3 months, and that it was revised so massively down. Look, if they revised it by 10,000 jobs, that's fine. It was 260,000 jobs, which is a very big number. I would say the average payroll report shows up anywhere between 100 and 150. You know, so that's literally like 2 full payroll reports almost revised downward. Which shows a much weaker labor market. That's why rate cut odds went up, is because that labor report was so revised down. Yeah, let's take a look at treasury yields this morning. I don't think I've looked at yields. So yields are slightly elevated. This probably, I mean, yields are up, which is a higher interest rate sentiment. Remember, yields and interest rates follow each other. And so if yields go up, that means we got a higher interest rate sentiment. If yields go down, we got a lower interest rate sentiment. And so an example of this is like if, the easiest example, if inflation comes in hot today, if inflation comes in higher than expected, yields are going to pump from it. Why? Because interest rate sentiment is going to be higher. It's going to be more hawkish sentiment. And so if inflation data comes in hot today, higher than expected, interest rate sentiment is going to increase, like higher interest rate sentiment, higher rates, more hawkish. And vice versa. If inflation data comes in low and really dovish, then yields are going to dump, which is good for a lot of people. If you want rate cuts, you want yields to decrease. And so, but they're slightly elevated today. And even the odds of rate cuts for September, it was like 85, 90%. It's now like 82%. So that actually decreased a little bit over since yesterday. Yeah, we got 30 minutes chat. I was curious about your thoughts since I know you're neutral. I really don't know which numbers to believe, but that's a good point to look at how the numbers are pulled. Yeah, I mean, that's the biggest complaint that people have. Again, I don't know if firing the head was the right move. I think that's more of like pressure, political pressure he's doing. But I think both sides should be able to agree that the inaccuracies in the labor reports, which they have revised a lot. Like, this isn't the first revision they've done to labor reports. They've revised the labor reports a lot. I think both sides can agree they need to fix this. They need to change how they're pulling this data, because the way they're doing it now is not accurate at all. And so it's giving us the wrong picture about the state of the labor market. It might push back rate cuts that might be needed because people are getting wrong data. Do you guys think we get a rate cut in September? Let me know in chat right now. Let me know. Do you think we get one? I don't know. All right, guys, we got 30 minutes. The Nasdaq's pumping up right now. Look at Intel pump up, SPY pumping up, gold pumping up, Nvidia making a move, almost green on the day. Here's the previous closing price. Nvidia's right over it. Yes. Can we have low inflation numbers, strong jobs, and still reduce interest rates? I mean, we can, and we have before. I think last year when we cut rates at the end of last year, that was a situation in which we had slowing inflation, strong labor report, still cut rates a full percentage point in the last 3-4 months of last year. So. All right, guys, Intel spiking up this morning. Nvidia now technically green on the day. The Nasdaq is pushing up. Yowzer says we will cut before the FOMC. I don't think so at all, bro. I don't think we're going to cut rates pre-FOMC. Again, I don't think we're going to cut rates pre-FOMC. That would be an emergency cut. That's a much more desperate move. Again, like, the only way we would do an emergency cut, again, I think the optics look bad for Powell, and I don't think Powell's going to do it. I don't think Powell's going to choose to do an emergency cut. I just don't. I don't think Powell's going to choose to do an emergency cut. I think that's going to make him look bad, and he's not going to do it. I think we're going to cut in September if we're going to cut, and that's if the data justifies it. But yeah, I think we're going to cut in September if we're going to cut, and that's if the data justifies it. Which, who knows? But yeah, we're not going to do an emergency cut. All right, so look at the Nasdaq pump here. Again, we did a China extension. Okay, so I'm showing there were some corrections to April data via updated weightings. says the BLS announced technical corrections to the April jobs report, specifically adjustments to the household survey weights. They were released alongside the May data described by the BLS as negligible in impact. But there was no systematic methodology changes in April. And I didn't see a reduction in the geography or number of cities covered either. But maybe you're right. I don't know. You could be right. Again, I'm really not sure there. All right, look at the NASDAQ pullback here. I see 5 issuers are contemplating U.S. investment grade debt offerings Tuesday ahead of CPI. So we got that going on. Still got 25 minutes until CPI inflation data drops. OPEC leaves forecast for global oil demand in 25 unchanged at 1.29 BPD. We have ECB, one of the ECB members speaking. He said interest rates are at a very good level. We can react flexibly if necessary, and inflation is no longer a major challenge. Tariff uncertainty lower but not fully removed. Again, the CPI report's pretty big. We will see what it does. Okay, so we're dipping down. Intel pulling back a little bit. Markets are pretty flat. Might short it up here ahead of this data. Try shorting some. We're green on the day already. If we pull back to that 200 exponential level here. There we go. Get filled down here. You gonna fill me? No? Okay, there you go. Got filled. I just want to build up a small cushion on the day here. We'll hold the rest break even now since we got so in green so quickly. I do think it's possible we trend downward just because it's CPI day. We got 25 minutes before the data, 20 minutes before the data releases. And we could just move choppy and sideways. There we go. We could scalp this down here. There we go. Nice. It went down as soon as I, like, some of my entries have been good because it's been good, reacting really well as soon as I get in. And again, it's CPI day, so I'm kind of just scalping these movements, but yeah, I mean, I could check this. Okay, so I'm showing this. It says they're correct that starting in April 2025, the BLS stopped collecting CPI data in 3 specific cities. Lincoln, Buffalo, and Provo. But it says that this is reduction due to staffing and budget constraints rather than an abrupt to convert methodology overhaul. I don't know how big those cities are. Like, Provo's a pretty small town. Lincoln is medium. Buffalo is larger, but still not the biggest cities. One of the biggest cities that's going to drastically impact it, to be honest. And originally it was April they did it to Lincoln, Nebraska, and Provo, and then in June they suspended Buffalo. These areas are only about 3.6% of the national footprint. So I don't know, maybe, but CPI is a little bit different. Labor statistics like the NFP and unemployment data remain based on surveys. All right, guys, we got 20 minutes. 2% a day. BBAI. BBAI is interesting. I mean, it's an AI company, but it's down huge from its earnings. Look at BBAI. It's a big drop for this company. Look at this. It's a big drop from earnings, right? Earnings yesterday. Looking at our poll, 52% think higher, 26% think 26% think lower, 22% think as expected. AI bubble is popping. I don't know. Nvidia's at all-time highs. It depends on which bubble you look at. I mean, anytime you look, guys, you trade a penny stock, it's a penny stock. If it's under $10 a share, you know, it's a brand new company, most likely. There's risks, you know. Again, one of the biggest issues that I see with investments is that people buy penny stocks like they're freaking Amazon or Apple, and they're not. You know, and a lot of the time, those little companies, they have these big groups of investors, right? And they all talk each other into buying it. They're like, yeah, this is the greatest company in the world. They're like, you think ABC is the greatest company in the world? Yeah, it's the greatest company in the world. It's going to go to the moon, guys. It's going to go to $500 a share. We're going to be rich. You know, like, oh, it's going to be rich. It's going to go up. It's going to go up. And it's just confirmation bias. And they kind of trap people into investing into little bitty companies. I'm not even talking about BBAI because I generally like AI companies. But they talk people into investing in penny stocks. But penny stocks can go down 60-70% in 3 days. They can drop 90% in a year. You know, they're not normal conventional investments. And so they're investments in which you'll probably lose a majority of the time, but maybe on the ones you win, it compensates for it. Maybe. But the problem is that people think they're investing into Amazon because you got so many people patting each other on the back, telling people how great the investment is, and then it just keeps going down. And I've said it once, I'll say it again. Healthy companies don't need to talk people into investing in them. You know, not really. Like, Apple doesn't have to pat you on the back for investing in it. People are going to buy Apple because it's valuable. And that's not the same thing. So anytime you get like these group of investors that are really pressuring you to buy a specific penny stock, I would run away. Because most of the time they're trying to justify you holding a wildly depreciating asset. And so just don't get caught doing that. Some of them might go up, but it's not going to be a majority of them. Yeah, I always talk about the Wolf of Wall Street when I talk about this. Aerotide International, a cutting-edge firm out the Midwest, awaiting imminent patent approval on the next generation of radar detectors, and it's really just like a shack, right? But again, that's the wordage you have to use if you want to talk people to buying a wildly depreciating asset. And you'll see that mirrored in a lot of these terrible penny stocks. Like, you know how many people that have come here and shamed me for shaming their penny stock? They'll be like, yeah, buy SOS. And I'm like, SOS is dog crap. Don't do it. You know, don't buy that. It's probably going down. Most of these are going to go down. And they get mad and they pressure you and they talk about how great it is. And then eventually over time, it's just silence. It's just crickets. You never hear from them again because their stock is about to get delisted and go to pink sheets or even worse. And then you'll never hear from the stock again. And then they're like, man, I got. And so just be smart, guys. Listen, healthy companies don't need to talk you into investing in them. The original meme coin, that's right. Hey guys, we got 15 minutes, a little bit over 15 minutes. The NASDAQ is honestly ripping up. The shorts we got into capitalized on these moves, but the NASDAQ is pumping up here. Yeah, but Tilray was once a $300 stock. So Tilray might be getting huge at $1.06 a share. It was once $300 a share. You know, it's only up because of the descheduling or the rescheduling news. But if you look at the history, I remember 2018 when cannabis stocks ran. Tilray used to be $300 a share. So it had $1.05. It might be up, but is it really? Higher CPI would be good for rate cuts. Explain, Paul. Why would higher inflation data be good for rate cuts, sir? I think you got it backwards, personally. Lower CPI would be good for rate cuts. In order to cut rates, you need weak economics and price stability because of the risks of lowering rates is worse inflation. And so if we have higher inflation, that means less odds of rate cuts, not more. if you want rate cuts, you want lower inflation, you want price stability over everything else. If CPI is higher, it's going to push back the odds of rate cuts almost certainly, because that means we don't have the price stability we need to justify rate cuts in the Fed's mind. Yeah, again, so in order for the Federal Reserve, they need their dual mandate to hit, and in order to cut rates, you need price stability, you need low inflation. If inflation's high, stimulating the economy doesn't make sense, because what happens when you stimulate the economy? It could make inflation worse. People tend to spend more, businesses expand, and all this different stuff, and it makes inflation worse to a certain extent. It can, at least. And so in order to justify rate cuts, you need lower inflation, not higher, and lower inflation is going to make like bond yields decrease, which is going to mean a lower interest rate sentiment moving forward, especially with like mortgages and stuff. Higher inflation is going to push back the odds of rate cuts, is what it is. Yeah, I mean, right now it's pretty probable we're going to cut rates in September, but it depends on the data, man. Like, today's data is really, really, really important. So we need good data today to justify rate cuts. Like, if you want rate cuts in September, what you want to see is a lower inflation print today. Again, it's expected at 2.8% year over year for headline inflation. Core inflation is expected anywhere between 3% and 3.1% year over year. Month over month, it's expected at 0.2, which is actually a little bit of a decrease for headline from 0.3% previously. And core CPI month over month expected to uptick 0.1%. So we're seeing the most negative impacts to inflation relative to last month's CPI report in core, which excludes food and energy. So excluding food and energy, that's where we're seeing the big negative increase, or the big increase, which is bad, right? Higher inflation. Headline inflation, it's expected to uptick a little bit year over year from 2.7 to 2.8%. But month over month CPI headline is expected to decrease to 0.2%. So it's kind of mixed. Some of these numbers are going up month to month in big ways, like year over year CPI core. And some of them are going down month to month, like base headline CPI month over month. So depends on which metric you look at. All right, guys. We got an important report going live. CPI inflation data live, 8:30 Eastern time. See what we get. Give me your last minute predictions. We got a poll going live. Let me know if you think we're going to cut in September. Let me know if you think we're going to see lower or higher inflation today overall. That's the easiest way to put it. Put higher or lower in chat right now. I personally, if I had to guess, I'm going to think slightly lower. I'm going to think 2.7%. 2.7% is what I'm going to go with year over year for headline. Slightly under the expected 2.8%, but who knows, man? This is just a straight up guess. I'm going to go with 2.7. We'll see. What do you guys think? All right, I'm showing higher, lower, higher, lower. Interest rates odds will go down. I'm going to go with 2.7. Again, I might be wrong. I don't freaking know, man. Maybe we come in higher. As expected. 2.8, slightly higher, 2.9. 3.3. I'm assuming you're talking about core, Sam. If headline inflation shows up at 3.3, market's gonna freak out. If headline inflation shows up at 3.3 again, market's panicking, almost certainly. All right, guys, we got a little bit over 10 minutes left. Hit the live button next to the play button. Make sure you put it in 2x speed. We're gonna cover this as soon as it drops. As soon as it drops here. So just be ready. Very important report. Again, we got about 11 minutes, 10 minutes. 2.9. Real question is if it's higher, who loses their job? I don't know if anybody does. Yeah, I don't know. It's a big report, guys. We'll see what we get. I'm gonna slow my trading down until afterwards. Hit the like button, hit the subscribe button as well, chat. We appreciate it. We got less than 10 minutes, just slightly less. Again, gold decreasing now. Gold's coming down a little bit. I think we could have choppiness. We got 10 minutes left. But the NASDAQ is slightly green over the past 20 minutes. If we're looking at on the day, the NASDAQ is slightly green on the day. So is the S&P, I believe, right? Yeah, S&P slightly green. They're both basically around the previous closing price. So most of them are pretty flat on the day, showing kind of apprehension, fear. We'll see. Yeah, Nvidia slightly green on the day, but very much flat as well with everything else. All right, guys, we got 9 minutes left. Again, hit the live button. If you put it in 2x speed, you won't be delayed. If you hit live and put it in 2x speed, you won't be delayed. You'll get real-time updates to this data. And again, we cover it very quickly as soon as it drops. So stick around. We got 8 or 9 minutes left. We'll see what we get. We're going to cover it as soon as it drops right here. Make sure you subscribe. We appreciate it. Thanks so much. And again, I'm ready. This is a big report. It's bigger than most CPI reports because of the nuance of rates and the hawkishness of the Fed last time and kind of the polar opposite view by the president and the Federal Reserve chairman, right? Like these two things make this report a really, really interesting report just because of those specific nuances where the president and Jerome Powell are like old married couple. They freaking hate each other. And so one of them is pretty hawkish and doesn't really want rate cuts. The other one really, really wants rate cuts. And the combined aspect of that, and just everybody has different opinions on it. The BLS labor report showed massive weakness in the labor market, much worse than expected. People got fired for it. And I don't know if firing them was the right move, but I think we should, again, certainly change the way we pull that data to make it more accurate, because 260,000 jobs revised down is bad. The bad miss in terms of accuracy. But with that said, you know, over the past 5 years, something that we've seen over the past 5 years is we had 2020 happen, and I usually explain this at least once on big streams. We had 2020 happen. The FOMC brought rates down to almost zero because of the super weak economic state of past 2020. Supply chain problems, lockdowns, all the bad stuff that happened. So they feared a recession, a looming recession. So they brought rates down to almost zero, tried to stimulate the labor market and the economy. They also did quantitative easing, which is a form of money printing in which they create online bank reserves, and then they use those bank reserves to buy up bonds and other financial assets. It helps bring interest rates down, injects liquidity into those markets. And they also sent out stimulus checks. And we also had supply chain problems. And so all of that stuff combined made inflation, CPI inflation got up to almost 10% in 2022. And so that's when the Fed got really hawkish and they started restricting rates. They raised rates a huge amount, 400 plus basis points, and they kept it there for a year. And then heading into last year, they finally started reducing rates at the end of last year, and they reduced them by a full percentage point, and then we've essentially been pausing rates since then. And so because of that, inflation data matters a lot today. And yeah, we'll see what we get. We'll see what we get. It's an important day for markets. It's an important day. We'll see. Here goes the CPI report. We're getting some volume, though, some spikes here ahead of this report. Again, we're going to break the full report down live. Look at the spies pop. I'm trying to see if there's any news. I don't see any really yet that might make this move. All right, guys. I'm ready. It'll be an interesting day. We got a little bit over 5 minutes left. Look at the NASDAQ, the S&P start to pop a little bit. Look at the NQ start to pop. Gold decreasing here. Strength in markets right now. Does big money know something? Look at the NASDAQ rip here. Wow. Let's see. Nvidia's heading up right now. AMD's heading up. Palantir's heading up too. Seeing some strength ahead of this report, guys. All right, 5 minutes. 5 minutes. Every time people always say CPI was leaked, it almost never is, dude. But you hear it's leaked a lot. It almost never is. Look at the NASDAQ pump up. India and China resuming direct flights soon after 5 years. All right, guys, here we go. We got less than 5 minutes left. We got 4 minutes left. Hit the subscribe button, hit the notification bell. We appreciate the love. Thanks so much. And let's do this. Again, put it in 2x speed. Circle is going to launch layer 1 blockchain ARC using USDC stablecoin. We saw that news earlier. NASDAQ, S&P, Dow pumping up ahead of this. Look at the SPY. Look at the NASDAQ on the left side. Again, here's Nvidia. Nvidia's ripping up too. Holding its green movement. All right, guys, we got 3.5 minutes. 3.5 minutes. Again, hit the live button. Look at the market pump ahead of this. Wow. I don't really see any breaking news either to make this move happen. This is either insiders knowing something, or this is Nvidia and other microchips rebounding back up is what I see as well. Mostly microchips. Gold's decreasing, NASDAQ, S&P pushing up. All right, chat, here we go. All right, guys, we got 2 minutes left here. This is it. All right, guys, here we go. Again, 2 minutes. All right, so again, headline CPI inflation month over month is expected at 0.2%. All right, so core CPI again expected at 3%. Core CPI year over year expected at 3%. Core CPI month over month expected at 0.3%. All right, here we go. We got about a minute left. Here we go, guys. Let's see this. Again, be ready. We got about a minute left. Gonna be 0.43%. I'm going with 2.7% is what I'm guessing here. 2.7%. Again, we're gonna look at the BLS data. We're gonna look at the report here. Let's do this. We'll take a look at bond yields and watch what they do here. 45 seconds. 45 seconds. It's a very big report. I'm gonna go with 2.7%, which is slightly in line with expectations, a little bit lower than expected. All right, here we go. We got 25 seconds. Hit the live button next to the play button. Make sure you're fully caught on stream, chat. We appreciate it. This timer's a little bit early. We got about 15 seconds left. Hit the live button next to the play button. Here we go, guys. Data's about to drop. This is it. Let's see what we get. A little bit over 5 seconds left. Again, hit the live button. You'll catch up. All right, here we go. Here's the data right here. Here's the report. All right, guys. CPI showed 2.7% year over year. 2.7% year over year versus 2.8% expected. Chat. So I got that one actually right. Core CPI showed 0.3% month over month and 3.1% year over year. Again, 0.3% month over month and 3.1% year over year. So core actually showed up a little bit higher than expected. CPI month over month showed as expected at 0.2%. and 0.3% for core month over month. All right, so the data came in 2.7% year over year versus 2.8% expected. I got that one right. 3.1% year over year for core versus 0.3%, 0.3%, and 0.2% as expected here. So CPI inflation is out. The NASDAQ ripped up here on this report. Look at the NASDAQ pop. But again, the data showed better than expected here for headline inflation, worse than expected for core inflation. Yeah, worse than expected for core year over year. 0.3% expected, as expected for month over month. Both month over months were as expected. CPI core showed a little bit worse, but as expected from other reports. And headline CPI inflation showed better than expected. The NASDAQ, Nvidia, the SPY, all reacting very, very favorably to this report. Now, let's dig deeper into the actual report, chat. So the actual report here, let's take a look at this. And then we're also going to summarize it here. So again, let's dig deeper. The market definitely likes this report. But let's dig deeper into it. So here's the BLS page right here. And let's look into it here. We'll also watch the market move as we do it. Look at the NASDAQ rip up here. So again, the CPI increased 0.2% seasonally adjusted basis in July after rising 0.3% in June. Bureau of Labor Statistics over the last 12 months, all items increased 2.7%. Listen, I don't know why I get CPI right every time. I really don't know. I'm just guessing. Straight up guess. All items rose 2.7%. Okay, so headline CPI rose 0.3% in June, seasonal adjusted, an increase of 0.1% in May. Over the past 12 months, 2.7%. Shelter index climbed 0.2% in June and was the primary contributor to the monthly CPI increase. So again, the shelter index climbed 0.2% in June and was the primary contributor to the monthly CPI increase. Energy index rose 0.9%. If we're taking a look at this, the energy index, again, rose 0.9%, driven by a 1% increase in gas. The food index grew 0.3%, food at home up 0.3%, food away from home up 0.4%. Urban wage earners and clerical workers, the 12-month increase 2.6%, monthly rise of 0.4%. Chain CPI showed 2.5% increase year over year and 0.3% month over month increase. Okay, so rebasing and methodology changes were announced ahead of the July 25 data to be released August 12th. Select series to December 24 equals 100, switching the CPI's wireless telephone service index to use secondary source data and non-traditional methods. But again, market has mostly reacted positively to this. We'll put this data up on screen. Better than expected for almost everything here. Or no, I'm sorry, better than expected for headline mostly. But core came in flat to slightly higher than expected. So we're kind of somewhere in the middle here. But yeah, 2.7% versus expected 2.8%. We'll put this data up on the bottom now. Try to drop it live. There's this one. We'll put core year over year. And again, both month over months were as expected. Core was as expected and regular was as expected. So we'll leave this one up for now, but you can see it at the bottom of the screen. Markets are up big. I'm sure bond yields are going to be decreasing a little bit. Let's see what bond yields are doing right now, because I think bond yields are an important look at where interest rates are going. I'm assuming they're going down on this report. Yeah. Okay. So bond yields are actually decreasing here. Bond yields. Yeah. So bond yields are decreasing. This shows a lower interest rate sentiment. And again, markets are pumping up on the lower interest rate sentiment. So look at bond yields start to fall down on this report. Very interesting. Weird that it's acting positively, isn't it? Not necessarily. Headline inflation was lower than expected. It wasn't high. Month over month was as expected. The only one that was, again, I was showing actually that core CPI year over year was expected at 3.1%. So essentially what I showed here is that everything was as expected except a headline inflation year over year, which was lower than expected at 2.7% versus 2.8%. So that's what I'm showing here, is that everything was as expected except for headline year over year inflation, which was slightly lower by 0.1% at 2.7 versus 2.8%. So that's what I'm showing here. But again, let me know what you guys think here. Yields are certainly interpreting this as a lower interest rate sentiment report. And so yields are certainly interpreting this as a lower interest rate sentiment. Somebody's saying I'm flat out wrong. In what way? If I'm wrong, explain it. Yeah. I mean, this is mostly as expected data, but headline inflation was slightly better. Okay. You are flat out right. Yeah, again, it's all love here, guys. I mean, if you guys think I'm wrong, let me know. But again, I'm not wrong on anything I said, I don't think. Maybe I am. I don't freaking know, man. Thanks for news every day. Hey, I appreciate you guys. Thanks so much. Yeah. Nasdaq's flying up here. Look at the Nasdaq. And stick around, guys. We are going to be trading. We're going to be trading live this report. Nasdaq is up big here. Let's take a look at the rate cut odds to see if they've changed. Again, if you want an earlier look at rate cut odds, you can just look at bond yields, which are down from this report. Again, they're down to 4.277% on this report, 4.26%. So a little bit lower than expected interest rate sentiment now, especially with mortgages, with bond yields. I'm assuming the odds for a September cut are going to be increasing. No, they haven't moved yet. We'll give it a little time, see if they move a little bit. But the Nasdaq and bond yields are all interpreting this as a lower interest rate dovish thing. We'll see. We'll see. You are the best stock news guy. Hey, thank you so much. You're wrong with the belief that any AI can invent new mathematics. I don't think any AI right now can. I think 20, 30 years in the future, AI is going to be capable of things that we've never even dreamt of. And that might include creating new mathematical things and raising the standard of math everywhere. I think that's possible. Maybe I'm wrong. I don't freaking know. Tesla at 345. Tesla up. PayPal up. A lot of stuff's raising up on this report. Very good. I'm green on the day in my investments. Nasdaq's ripping up here. Look at Nvidia rip. Gold is kind of flat. Went up originally and now it's down some. Crypto, if we take a look at it here. Bitcoin. Same thing as gold. Kind of went up a little bit originally and then down some. Nasdaq's pumping though. Nasdaq's getting close to all-time high. All-time highs in the Nasdaq, just to put this into perspective, chat, are right here, 850s. 850 is the all-time high in the Nasdaq, so we'll see if it hits that. 845 might be in the micro Nasdaq, but they're both around this level here. Around this level. The Dixie's dropping? Yeah. I mean, the Dixie's dropping because it's a more dovish interpretation of this data. And dovishness is going to make the Dixie go down, I think. Hawkishness is going to make it go up. But I might be backwards there. Hey, what's up, Tiny? Good morning. Yeah, 20, 30 years, AI is going to be crazy. It's going to be the next 5 years. Yeah, no, I'm being generous with 20 or 30 years. I think it might be earlier than that, too. I think if you look at the... Again, I've said this 1,000 times. If you look at the rate at which AI has grown over the last 3 years, and then you extrapolate that over 30, AI is going to be crazy in 30 years. Not literally crazy, but crazy smart, I should say. It's not that complicated, people. Lower CPI equals no excuse for no rate cuts. Yeah, that's right. Lower CPI means it's much more probable we're going to cut rates. And the only thing that might change this, again, listen, I think it's almost certain we're going to cut rates now in September based off of the CPI report. That's probably why markets are pushing up, and I'll explain why. Okay, so lower CPI today, which is mostly what we showed. Core was as expected. Month-over-month headline was as expected. Month-over-month core was as expected. Year-over-year headline was lower than expected. So as expected or lower than expected everywhere for inflation data. I think this makes it really hard to ignore a potential pause, or it makes it really hard to ignore a rate cut in September, because we've had weak labor markets and we have price stability to a certain extent. And so we have weak labor markets in the job revision. We have the recipe you need to justify rate cuts. And aside from this, the only thing that might change this, we got a couple reports this month that could change it in the next 30 days, I should say. Not really this month. One of them's next month, but there's two reports. All right, 2 reports. Okay, there's really 3. We got the Fed minutes report, which is not really going to change things, but we have the PCE inflation report and GDP. PCE and GDP usually come out consecutively, one Thursday, one Friday. If GDP shows strong and PCE is high, that might push back the odds of rate cuts. But you know, we'll see what PCE shows up as. PCE is the Fed's preferred inflation metric. It's called the personal consumption expenditure. It drops at the end of this month. If that data shows up high for some reason, that might push back the odds of rate cuts. As well as we get an updated labor report next month, early next month. You know, now it's a little bit too close to the Fed meeting to make any significant changes regarding economic policy, I think, but it could, you know, it could. Also, guys, you want to help support the channel, we're going to day trade live into the opening bell. We're using Top Steps funded account program. We're on like a pretty big green streak, I think. Let me make sure. I think we're on a pretty big green streak. I think we've had like a lot of green days in a row. Let me check it out. I'll have to. Okay, we're only on a 2-day green streak right now, but we were on like a 6-day green streak for a while. But yeah, we're going to be day trading Top Steps funded account program. There's no, if you want to get around the PDT rule and learn to day trade, and day trading can be a skill you have for the rest of your life. Do not fund your own account tens of thousands of dollars trying to look cool. You're probably going to lose it. Everybody will tell you this. This is just the truth. You're probably going to lose it. Instead, try a funded account program. Top Step's the most legit. $50 a month for the base one. They give you a 50K demo. If you can make 3K without losing 2K in profit, but while following their rules, they fund you 50K, 90% split, and they pay out millions, fund thousands. There's 0 commission on Top Step X. Their new dashboard allows you to track payouts quickly. You can track everything going on. You get instant funding once you pass the test. And it's a very reasonable test. And again, it just makes sense. And most day traders are going to lose, including here. Frankly, it's a lot cheaper to lose here than it is to deposit 5, 10, 20, 30 grand and lose that, most of the time at least. And so again, it just makes sense to learn this way. In the futures market, you can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. And most day traders lose, so it just makes sense to try this first. Test your skill. If you're good enough, then you can withdraw and fund your own account. If you're not, you're going to lose $50 versus for the base one, $100 for the middle one, $150 for the top one versus thousands in your own account. Again, they're an affiliate or sponsor of mine. I'm biased because I get paid by them. So naturally, I'm pretty biased in their favor. But if you want to check it out, understand all the stuff on screen. I can't guarantee anything. Great way to help support the channel. Here's the link right here. I appreciate the love. Thanks so much. Top 3 plugs in the world right now. All right, I'll pin this message to the top of the page. Yeah, gold's starting to rip up actually here. Look at gold. Gold's making some moves here. Gold up to 3,400, still not quite at the all-time highs. NASDAQ is very close to this all-time high level. I might start day trading this here just because I think we're this close. I think we're going to test highs. I might be wrong. I'm going to start adding to this position here. I might be wrong. But I'm going to add potentially down to 75 here. Take a little bit of a riskier position. If we push up some more, we're very close to all-time highs in the NQ and the micro NASDAQ and everything like that. So I just want to see if we test it. I think the closer we get to highs, the more probable it is that we test it. But we're also green on the day here. So we have a little bit of room to take some risk. All right, we're going to add one more to this, and then we're going to leave it alone. Well, I wanted to leave it here. Again, luckily I got some profit on the day already. But we're kind of breaking down too quickly, I think. We'll give it a second. I think we want to test highs. So let's see if we get back up there. Okay, now we're right back up. I'm going to reduce my size a little bit if I can here. I tried. Yeah, that's good. All right, I'm going to reduce my size. And then I didn't want to reduce it that much. Now we're kind of flat on the day. Let's see if it's the right move. Yeah, I want to see if we test this high up here. I think we're pretty close to it, so I'm trying to take a longer term trade is actually what I'm trying to do. So I don't mind holding one contract into a pullback, which is kind of what we're doing, and then adding once we start to retest the highs of the day up there. But I don't want to hold multiple big contracts. I think that's too risky. We'll see though. It doesn't matter too much. Yeah, no, I'm not even saying we're going to hold. I just think if we get close to these highs, it becomes more probable that we're going to break them. Like if this is the all-time high on the NASDAQ and we're here, I think it's pretty probable we're going to go up there. It might not. You never know. There's always variance. You never know. But I think if we get this close to it, it makes it more likely that we're going to test. Maybe not, though. It can always not test. It's not like anything's absolute here. There's a Star Wars joke in there somewhere. There we go. Better. Is what bearish or bullish for gold? I don't know. It depends on, are rate cuts bullish or bearish for gold? All right, so here's the move up. This is what we thought would happen. Could have stayed in, but too big a size. There we go. There's another rip back up. If we continue. We'll give it a second here, chat. We only have 30 minutes left. 40 minutes left until the open. NASDAQ all-time high broke on your chart. NASDAQ all-time high was... I'm pretty sure the all-time high on the NASDAQ is like 845. 23,845 is what I'm showing. We never broke that. We hit the NASDAQ all-time high on July 31st, the day before the big labor report revisions. And so it depends on what chart you're using. I'm showing what all-time high are y'all showing on the NQ? I'm showing 23,845 is what I'm showing roughly. You know. Yeah, I wanted to add down to 75 and we almost bounced there too. Maybe I should have waited. Yeah, I mean, Ken, I can also understand how some people might think we're mirroring the dot-com crash. You know, internet stocks went crazy in 90s, and then by 2001, the check came, and we had one of the longer bear markets in history. We had a longer bear market, not from the dot-com crash, though. We had one of the longer bear markets because we went from the dot-com crash in 01 and 02 right into 08, which is the mortgage disaster. So we had two big economic events within a 10-year period. And that's why the bear market was so long. And so we'll see. We'll see. All right, guys. NASDAQ is surging higher here. I am going to add to this a little bit. And see if we start heading up where I want. Give it a little bit of time. There we go. Yeah, we're close to all-time highs here. I think I just gotta wait this out, but you never know. Do we break all-time highs sometime soon, chat? Let me know in chat right now. What do you guys think? Do we break all-time highs soon? I hope we do. You never know. Again, give me a follow at x.com as well, chat. At beginner trades, x.com, at beginner trades. We've been growing there. We broke 4,000 followers on X. Thanks so much. We appreciate it. Keep the growth up. at Beginner Trades. We cover all the economic data as soon as it hits too, so if you want to follow me there. I wanted to give it time. It looked like it was going to come back. Now we're getting a squeeze down, but I'll give it a second. There's a little retracement. A big retracement. Look at that. Wow. Very large retracement. And the gap's just filling. Got some buying pressure show up, but try to just let it consolidate here. Bitcoin's actually getting up to almost 120s. PayPal's trying to get up there too. PayPal looks okay. Rebounding some. Green on the day for PayPal. Big down wicks. Yes, all-time highs. Yes, all-time highs. Maybe. I'm in the opposite trade. It's all right. You might be right. I don't freaking know. I'm just trying to trade the high of the day. I think I've done really well. Like when we get close to big all-time high milestone levels of attacking the range up to those levels. Like I don't want to attack the break. Like I don't want to buy it at 850, but I don't mind buying it at 8 or at like 8 and then riding it up to 850 is kind of the trading strategy that I use. I don't want to buy the high of the day. I want to attack the range up to, or I don't want to buy the lifetime highs. I want to attack the range heading up to the all-time highs, because I think when we get close enough to it, again, it becomes more probable. It doesn't become 100% probable, you know, it becomes just more probable. You got a little bit more edge there, just because of the people saying, oh, look, we're about to break all-time highs. They step in, they start buying it psychologically. I think it makes sense. But again, there's always variance, and so. And I've made enough in those type of trades to be okay if we don't here, but I'm hoping we do. Hoping we just rip up, break 825s or whatever the high of the day is. But sometimes you got to ride a little bit of sideways action getting to that point, so that's kind of what I'm doing. Q passed all-time high, did it really? 577s. Yeah, it depends on which all-time high you're looking at on the NQ or on the QQQ though. When you look at a long-term chart, they usually don't take into account pre-market data. So being up at 577 would be all-time highs. But it depends on if they're taking into account pre-market stuff. Well, the regular NASDAQ isn't open right now, is it? You're talking about the QQQ, which is based off of NASDAQ futures. Depends on which one you're looking at. NDX isn't open right now. Congratulations, John. Your channel has more viewers. Oh, that's cool, I guess. We try. For a channel that's just me, like there's a lot of networks and stuff out there. For a channel that's just me, we do pretty good. You know? Like we had almost 4,000 people for the CPI report, so I appreciate you guys. You know? You got a lot of other big networks with like a bunch of different people doing stuff, and so we compete well with everybody. Or just me. All right, guys. So we're starting to rip up. We're basically flat on this position. I'm trying to give it time. I think again, if we get up there, it makes it more probable that we're gonna start breaking highs up there. So I'm watching the NQ. Doesn't mean we will, though. You never know. We're kind of sideways right now, heading into the opening bell in about 35 minutes. We'll see what that looks like. And again, stick around. We are going to day trade the opening bell live a little bit heavier than we're doing now. Trying to give it time. There we go. Let's get up. Don't you hate it when your entry turns into resistance if you're long? The worst feeling ever. DDP or Hamzat? I feel like Hamzat is probably going to win. You never know, though. DDP, I thought DDP would lose, and then he just somehow, he just gets it done. And so, My mind is telling me Hamzat, but I don't freaking know. DDP could do it. I'm not going to count him out too much just because he's proved me wrong a lot. His style's so weird, dude. His punches don't even look good. They don't look technical punches. They're just kind of helicopter style punches, but he makes it work somehow. And then he gets into his grappling. The only problem is that Hamzat's grappling is a different level completely. And he can KO you. But his grappling is a different level. So I'm going to go with Hamzat because you don't bet against I know Hamzat's from the Czech Republic, but you don't bet against anybody that's close to Russia, in my opinion. Don't you hate it when your entry turns into resistance here, guys? I don't like this breakdown, though. It's a little sketchy of a breakdown. I took a piece off. Yeah, I don't like this drop. I can always add back. We're basically... All right, guys. Oh, I thought he was from Czech. Oh, he's Russian. Okay. Yeah, you don't bet against Russia. You know. All right, so we're now dropping down a little bit here. We're at 760s. Look, my geography skills are not the best, guys. Don't judge me, okay? All I know is if he was born anywhere around Russia, I'm not gonna bet against him in MMA. It just doesn't make sense to. Especially grappler versus grappler. You know. Grappler versus grappler. Russian's probably winning. And I like jiu-jitsu. Like, I'm a blue belt in jiu-jitsu. But in BJJ, but you know, my heart's telling me BJJ's gonna win, but my mind's telling me Russia's gonna beat anybody in grappling. Anyways, we're still pulling back here, guys. Maybe I'll buy another dip. I don't know, but we'll see. Yeah, rate cuts are probably no, I know a Hamza actually. So I know it, like, you know. All right, so we're dipping down. We're at 576. 576 on the Q. Nasdaq's pulling back. Maybe we're going to bounce at the 760 level. I don't know. I'm going to draw some levels here, see if we can find anything. 760 maybe. I think 750 psychological. I think we got this low down here at like 720. We got this isolated high up here at like 725s or so right now. And then we got 73.8s, which has been heavy resistance. Yeah, no, judo people are different. A good friend of mine is a black belt in judo, and I rolled with him when he was a white belt in jiu-jitsu. And he didn't feel like a white belt in jiu-jitsu at all. You know, I never stand with him. I pull guard immediately if I roll with him, because if I stand with him, bad things happen. You know? He's actually pretty nice and gentle with it, but like, I don't feel like getting hip thrown. Yeah, I think we're the probabilities that we're gonna get rate cuts have gone up dramatically here. Yeah, so look at the odds for rate cuts now. They've gone up to 92% after this report. 92% after this report. So the odds of rate cuts have increased to over 90%. As I told you guys they would. If we had lower inflation data, or, you know, even the big thing here is not even lower. Like, you got to look at this like a neutral thing, right? If you got to look at it in a neutral perspective, I think, regarding inflation. Like, as long as we don't get anything that can stir us away from rate cuts, meaning like high inflation, as long as we don't get alarming data, like relative to expectations as well as previously, then that's good. And that means we can continue on this path right now where we're at a 92% likelihood of rate cuts, right? The big issue is that if we get super high inflation data, like if we show up at 3% or 3.1% for headline versus 2.7, 2.8%, that's scary, that's bad, that's going to decrease the odds of cuts. But if we show up as expected or slightly higher or slightly lower than expected like we did today, that increases the odds that we're going to confirm what is the base case right now, which is a September rate cut. I use a couple different tools. All right, so look, we're going down to 760. Look, I'm going to be greedy here and I'm going to buy this. Because I think higher likelihood of a September cut is good. We're going to buy it down to 60 right here. We're going to try to scalp it though, so we'll see what we get. All right, there's 60. Let's see if we bounce here. There we go. Got a little bounce. Oh, come on. Let's bounce more than that. There we go. Now we hit that 60 level. We bounced a little bit. Volatile right now, though. All right, we got filled a little bit here. There we go. We're right about our line, but it's kind of coming back down fast. We'll give it a second. Hasn't been easy for me to make money today. Let's see if we bounce again at 60. I'm trying to buy the dip, looking for that retest. Oh man, dude. We're gonna have to cut that now. 50 might hold. But yeah. What is your call for Nvidia at the end of the month? I really have no idea. I'm trying to buy the dip and look for a rebound up to 8. And it, maybe 750 holds over 760. I bet it on 760, maybe 750 holds. Look, guys, sometimes you're just going to lose. It's such a subjective thing. It'll be okay. You know, top 3 worst trader ever today. But maybe tomorrow I'm the top 3 best. You know, that's how it goes. Let's see if 750 bounces. There's so much variance with short-term day trading. Everybody can say, see, I told you so, I told you so, but nobody knows if we're going to rebound and retest highs or if we're going to continue breaking down and go red. Nobody freaking knows. Everybody wants to claim they do. Nobody does. All we can do is guess. Speculate. Yeah, no, I already saw that China is encouraging people. China is encouraging not to buy the H2O chips. So the Trump and South Korea president is set to meet on August 25th in Washington. So that news just came out. Effective federal funds rate is going to be lower today. Nvidia China's internet regulators ordered by ByteDance, Alibaba, Tencent to suspend their purchase of Nvidia chips according to the information. That's what's driving markets down. Yeah, Nvidia's turning down here. So this is what's going on. Yeah, so Beijing, China dependency stock after stockpiling 16 billion in H2O pre-ban, ByteDance and crew are now face a full stop amid tracking fears as well. So again, chip news is bad. I'm gonna wait to day trade it at the opening bell. We'll see how it goes. No, I'm not going to buy now. The Nvidia news is too bad for it. I wish I would have seen this earlier. Hey, y'all hit that subscribe button if you haven't already. Hit the notification bell. We appreciate it. Let's keep the growth up. We're gonna be day trading live at the opening bell. We got 25 minutes left. So we'll see if we get anything good. All right, guys. So again, we're gonna be trading the futures market and maybe the stock market. We can buy some stocks too if y'all think anything looks cheap right now. Again, since this news regarding China and chips, the Nasdaq has been flushing down. All right, guys. Dollar index is pushing up though. Let's see if 720 holds. Somebody on X said they've been watching me for 6 years. Hey, thank you so much. We appreciate it. But yeah, again, China's internet regulators ordered ByteDance, Alibaba, Tencent, and more to suspend their purchases of Nvidia chips. This is bad. That's why the Nasdaq, S&P, Dow down. Interesting, the timing of China Nvidia announcement. This song right here, you want to know this song? This song is called Dylan Sitz is the artist. It's called Part 2. Dylan Sitz has got some good songs too. He's got like Rain Check is a good one as well. See if I can find Rain Check. I had it somewhere in here. Kind of older song. All right, so we might start getting a bounce here. I'm seeing the dollar index start to pull. Also, the Nasdaq's at the VWAP area. All right, guys, we got about 20 minutes left until the market opens. We'll see what we get. We're gonna be day trading live, a little bit heavier now. Hey, what's up, American? Bad news bears. I mean, we're still green from the CPI report. Just to put this into perspective, right? CPI report showed up here. And so we are up a little bit relative to the CPI report. And I would say most people were interpreting this as bullish. Yeah, look, here's Rain Check, which is another good Dylan Sitz song. Yeah, gold's sideways, really. It's down a little bit from this. Let me see, actually. Yeah, gold's actually up a little bit. Gold's mirroring the market right now. Crypto is as well to a certain extent. Nvidia's coming down, though. That's what's driving markets down. Yeah, so again, the other big thing that comes out this month is the Jackson Hole Symposium. It comes out on the... I'm trying to wait to see if they've given us a date. Trying to see if they have a timer for this. But the Jackson Hole Symposium is going to be August 21st through the 23rd. Jerome Powell speaks. Yeah, so here's the Jackson Hole Symposium. Bro, I don't care about timeline. I want to see when Powell speaks. Yeah, so again, we should have I don't have permission. Let me see if AI can help me this. I'm trying to see when Powell speaks. All right, guys, so we are kind of consolidating here. Yeah, well, the problem is the news. Friday morning of Jackson Hole, August 22nd in the morning local time, which would be 10 a.m. Eastern time. 8 a.m. Mountain time is most likely the best estimate based on precedent. No official confirmation, but it's probably going to be the 22nd on Friday for Jackson Hole. Yeah, so that's going to be Friday. How's that speaking today now? Okay, let's do another poll. I don't think I ended this poll here. So out of this poll, we got about 3,000 votes here. Most people thought higher than expected, so y'all would be wrong. We came in at 2.7% lower than expected today. With the NASDAQ and or S&P break all-time highs today. Yes or no? Vote on the poll. Let me know what you guys think. Nvidia's starting to bounce back a little bit, but there's a new poll live. You can vote on it now. Will the NASDAQ and or S&P break all-time highs today? Yeah. Yeah, I follow Walter on X. All right, guys. Top 3 wrongest. Nice tunes. Hey, thank you, sir. Appreciate it. All right, guys. Hey, we got 15 minutes left. 15 minutes left. We'll see what we get. We're going to be day trading the opening bell live. We'll see what it shows up as. Nvidia's starting to rebound back up, too. All right, guys. At 750 levels now rejecting. Let's see if Nvidia. We got the 200 exponential. Nvidia is still very flat. We got the previous closing price, 200 exponential. Here's the VWAP. Here's the 200 exponential, and then here's the previous closing price right here. And so within the range we're currently at right now, we have all these big milestone levels, movements, influence levels around all this stuff on Nvidia specifically. So I'm watching to see if Nvidia gets over this, because I think Nvidia is moving the market right now based on the China news about discouraging companies from buying Nvidia chips. And so we'll see what happens, but yeah, that's what I'm showing right now. Yeah, NASDAQ likes to hit highs lately. That's why I'm thinking, like, I would buy this, but I'll try one buy here. Maybe I'm getting stubborn with a long. Top 3 worst trader ever, maybe. But I think I could buy a long. It's not going to be the end of the world if it goes against me. And I can try to give it time to creep up with everything else. I think the CPI news increased the odds of rate cuts. That's going to trump the bad news about China discouraging people from buying Nvidia chips. But you never know, and I'm taking one very small contract here. So it doesn't matter too much. I'm sure the bears are going to get mad at me for taking this trade. That's all right. Top 3 worst trader. I don't even claim to be a good trader. I'm just here covering economics. I day trade the opening bell live. So, yeah, so just to put this in perspective, later yesterday during the day, we did get another China extension. We got another extension for China. We have another 90-day extension. The new deadline for China tariffs is going to be in November now. Most people are thinking November 9th or 10th for the new deadline for China. We'll see how that goes. Yeah, definitely top 3. Worst ever. It's all right. The idea here is like, I'm going to take a very small risk trade at about 719s as my risk level. I might give like 715s here. And then give it time to potentially bounce or run, depending on what the other blue chip stocks do. And if we get stopped out as small. Are you talking about the Prez, Justin? Yeah, Thursday we have the other side of this inflation report, which is very relevant, right? So Thursday we have CPI inflation, which is wholesale inflation. A lot of people consider PPI a more accurate look at where prices are going. So Thursday's PPI report's big. We also have jobless claims unemployment on Thursday. And then Friday we have retail sales data. And just like today, we're going to cover it live 8:30 Eastern Standard Time as it happens. And so that's what we're looking at now. But we'll see. Yeah, I mean, that's where the taco trade thing comes into play. Again, I'm not even the one that takes that, but here's the thing, right? The president, again, I'm not even partisan. I'm very neutral here. Like, I don't care about any of this stuff in terms of like rooting for a specific side. The president wants a thriving economy under his watch, so he wants lower rates. And I get it, right? Like, if I was the president, I'd want lower rates too, because that means a thriving economy. It's a bragging point for every president. Every president wants to brag about a strong economy. You can't knock them for it. That's how it goes. But going like this, you know, okay. He wants to get a deal done with China, right? And so I think what he's probably going to do, he's going to keep pushing it back until they agree on a deal. The last thing the president wants is no deal with China, because he understands the significant impact that it's going to do to markets if we do not get a China deal done and we don't have an extension done either. You know, like, and he also understands if he wants rate cuts, you better at least extend or get a deal done with China, because if you don't, that's when prices are going to be up. You know, because again, we're the single largest buyer of Chinese goods in the world. We need them for price stability, and they don't want to lose their largest buyer either. But I do not think the president would be willing to not extend or not get a deal done. And so I think he'll keep extending until we get a deal done. And who knows when that's going to be. But that's my guess, is that he's just going to keep extending it until he certainly doesn't want to announce no deal with China, 140+% tariff spike. That is certainly not what he wants. And I think that's the kind of dynamic we're seeing now, where, you know, he knows we need to get a deal done with them. He knows that if we don't get a deal done, it's bad, or at the very least extend it, which is what he's going to do. So. Yeah, well, I'm a better swing trader than I am a day trader, to be honest. But I have my moments with day trading too, but I'm a better swing trader, I would say. Yeah, no, they came out with that news to try to advantage their trade deal. I could probably see that. All right, Nvidia's starting to pop up a little bit. Let's see if we get some bullishness here. Yeah, Circle's flying up after good earnings. Circle up to 185s right now. Look at Circle. Circle up to almost 185s. The question you have to ask yourself regarding markets right now is, what's more significant of a catalyst? CPI inflation data coming in flat or cool, or China telling people not to buy Nvidia chips, one of the largest market cap companies in the world? Which one's worse or better? Which one cancels out the other one to a certain extent? And which one's more influential is what you want to ask yourself. That's what's going to be driving markets for the rest of the day, I think, is. And it's looking like right now the China news is more influential. Here's my stop down here. I don't know. Here's a breakdown. I wanted to give it a second. Oh, wrong chart. The odds of rate cuts have gone up to over 90% the last time I looked at it. Have they changed? Let's see. Yeah, odds are now 94%. So they're continuing to increase. Odds of rate cuts in September are now as high as 94%. So the question you have to ask yourself, barring other big economic news like China news, does the market get baked into a September cut now and go up over the next 30 days? When's the September meeting? Is it the 17th? Yes, the 17th of September. Did the market get baked into a rate cut now, barring any worse economic data or big China news? I don't know. Yeah, it was down to 82.4. Look, here's an old one that I have up here. It was at 82.4. All right, we got 9 minutes left, chat. It's not 90 to 94, it's 82 to 94, which is a big revert back to 90% plus. It's bullish, but you can't commit before Friday. Yeah, that's probably true. We have retail sales on Friday too. So again, the PPI report might be the other kind of question mark here. All right, guys, we got 7 minutes left. 7 minutes left. Yeah, I think the China news is a negotiation tactic for sure. 7 minutes. Soybean prices surged yesterday on the back of the post proclaiming China should quadruple its soybean imports from the U.S. All right, so Nick Timiraos, which is one of the people who usually gets interviewed after the Fed Q&A, during the Fed Q&A, he said the bar for a rate cut changed after the July payroll report. The September cut could have been derailed by a hot CPI print. The July CPI wasn't a no inflation reading, but it likely wasn't hot enough to stop a September cut. Right, that's basically exactly what I said. Makes me feel good about my economic analysis whenever you got like a big economic dude like Nick Timiraos from the Wall Street Journal essentially say what I said. So that's good. That means I'm reading it right. Top 3 best analysts in the world right now. All right, let's see what we get. Gold started to push up. Look at Circle up here too. What happened to Fig? Fig was big the other day. Fill up. Yeah, that's basically what's going on right now. This China news is canceling out. Yeah, we got 6 minutes here. We're kind of going back and forth, but Nvidia now is kind of flat. It's not really moving. Gold is too. BBAI miss? Was it really? Yeah, BBAI down big. Again, I've said it once, I'll say it again. Buying penny stocks under $10, it's not like investing in Amazon. Again, you got new traders that don't have that much money and new investors that don't have much money. They start DCAing and stuff like this like it's Amazon or Apple, and it's not. Penny stocks, you know, 1 out of 6, 1 out of 7 might succeed, and sometimes it can compensate for the ones you fail on, but you can't treat it like Amazon and DCA into it. That's a way to lose all your money, you know. All right, guys, here we go. 4 minutes. Nvidia's bouncing back here at that 200 EMA. Looks like it's starting to creep up. Let's see if it continues. Gold's coming down a little bit. Take a look at AMD, the other widely affected chip company. All right, so we're back to basically flat on this position. That's good, I guess. Trying to be patient now. But I don't like the open. I don't know if I want to hold through the opening. I'll give it a second longer, but the opening bell could spell chaos, especially for chips, and so I don't necessarily want to hold through the opening bell, and maybe I'll regret it, but probably going to cut this before the opening bell for risk management. All right, 3 minutes until the bell. All right, guys, we got 3.5 minutes left. See what the NASDAQ brings this year, heading into the opening bell. I am slightly long, but I'm basically flat right now. But I'm green. I think Nvidia and others want to hold. They look like they're gonna hold, but you never know. Even if we continue up, I think we might see some dips initially as an initial reaction to some of this at the opening bell. So. Yeah, we could have a big buyer at 5 minutes. Who knows, man? Circle's still pushing up, though. Look at Circle. We also have the market on open. I forgot about that. Coming out pretty soon here. Maybe it'll help us, but we're flat right now. 2 minutes left. I'm going to give it one more second, and then I'm going to cut it. Minute and a half left. All right, guys, we got about a minute left. Who we get? Nvidia's mostly pushed up leading into the opening bell, but it's not really holding up here. Some blue chips. I'm gonna cut this right here, I think, and just get out. I don't want to hold it. We basically got out flat. Like we lost like a very small amount of money there. It's a very small position. I just don't trust it. Maybe we'll take another trade after the opening bell and make some back, but I just don't trust this one. I'm not gonna hold it through the opening bell. That's just risky. Too much variance for the opening bell. We can go up big, down big. We got two contradictory, not really contradicting, but two competing catalysts today on both sides. Rate cut odds increased substantially, which should be a bullish thing. But we also have China telling people not to buy, telling companies not to buy Nvidia chips, which is very bad. And so either way, maybe we rip up. It's all good. We got out basically flat. I'm not going to hold through the opening bell. There's the bell right there. And we'll see. Nvidia falling down a little bit. Although the NASDAQ is pumping up. $750 taps. AMD and NASDAQ coming down though. I gotta wait 5 minutes to trade, so we're gonna give it time. Very muted open too. We don't really have any big like price action or movement today. Not initially, at least. When I'm watching AMD, look at AMD dump. AMD now red on the day technically. Nvidia bounced right here at the previous close though. United Health pushing up some more. PayPal is as well. Tesla's heading down. Apple's heading up. Robinhood up, yeah. The S&P. AMD's breaking down substantially. Gold's starting to move up though. Here's the SPY. This is the S&P ETF. SPY. Yeah, I mean, look at AMD and Nvidia dump here. Today, Nvidia's CPI is 10 times stronger than Nvidia news. I don't necessarily think so. It could be. Yeah, look at this drop. It could be, but I think Nvidia weighs the market and an AI influences the market in a, you know. All right, so we're 2.5 minutes into the day. Again, hit that subscribe button, hit the notification bell if you haven't already. We appreciate it. Gotta keep the growth up. Yeah, see, I wouldn't have held this anyway. 719 was my risk. So even if we rip up afterwards through like a liquidity grab scenario, it still doesn't mean I would take the trade. Yeah, look at Nvidia flush. Nvidia down to 181s right now. Tesla dumped too. Tesla at 340s. IMS is coming all the way back down. It's at 48s. That's like my weakest position. I'm gonna cut a piece of that thing down here. IMS, the weakest position. I'm net green in all of it, right? Like United Health's doing me really well. We bought United Health at like 240. So United Health is at 255 right now. We bought Amazon at 212s. It's at 222. Rox is green now too. PayPal is very green on the day. All right, so here's the NASDAQ start to rip. AMD, Nvidia, other stocks are starting to move. No, Powell doesn't speak today. Not that I know of here. I can check, but I'm pretty sure he doesn't. Wealth, right? Yeah. No, he doesn't speak today. Not that I see. We got the Fed minutes next week on the 20th on Wednesday. But all right, guys. SPY is heading up. Nvidia's still down though. AMD. So what's driving this? Not Tesla. Meta's flying up. Meta's at 786s right now. So this is Meta related. All right, so the president says Stefan Mirren's going to be on CNBC at 10 a.m. Best stream for news and info. Hey, thanks so much. Yeah, it's Google, it's Meta. They're both ripping up today. Google up to 203s. All right, so now is where I'm going to start buying a dip here if we get one. We bought a dip. Can capitalize on it. We'll add to it here. See if we get a pop. I know I'm kind of buying into the opening bell strength, but we got a big retracement there that I wanted. We're going to take a piece off there, lock it in, profit. We can get another rip. Try to get enough deep into the green where we can add to this and then hold it break even. We might hold it break even now, but I want to see if it continues up. Yeah, we're going to cut it right there. So we made a little bit of money on that trade. We'll try to add back on a pullback here. That might be a large enough one to add to. Let's see. I think we're getting close to these all-time highs. And I think the NASDAQ wants them. So let's see if we can add into this here. There's 4. We'll add maybe 6 here, and then that's it. Yikes. Huge dip, and then a retracement back up. We took a piece of that off up there. See if we can get out a little bit more here so it's not like a crazy big trade. We could probably add to this here and take a risk, but I don't like this. It could be catalyst driven. Try to add to it here, but I gotta hold this pretty tight. If not, we're gonna slow it down a lot. It might just not be my day to trade. All right, that's better. We're green now on this. At least we were. I'm gonna reduce my size now that we're green a little bit here. Very nice. Take a little bit more off up there. Take a little bit more off up there. Now we're just gonna hold this. Kind of a fake out candle here, but we've got enough into the green where we can let it work. We're gonna add to this now and remove our size up here if we can get filled. There we go. All right, we made everything we lost back on that bounce, but we'll hold the rest of this break even. There we go. Google just broke highs again. If strength comes in now. Again, I'll hold this break even on the rest and then maybe find another dip buy to add to. It's better. Looks like it wants to get up there, but it's running into a wall. See if it keeps going. There we go. I'm gonna cut it right here. Green, and then we will see if we can buy a pullback. I'm just worried it's gonna reject at 8 right here. Hey, thank you, Quinn. Yeah, dude, I'm not gonna target Tilray. It might be up a little bit, but it's up like what, 15 cents? Yeah, rate cuts are again, I told you guys, like, we get good inflation data. That's what we're gonna see. So we did a poll. Will the NASDAQ break all-time highs today? 65% say yes. We did reject at 800. We could get in another pullback here. I like that dip. Let's see if we can buy into it. Maybe add some if we get deeper into the green. Flat now. Yeah. All right, we cut that on the bounce. Starting to kind of creep our way back up here. We'll see if we can maybe buy another little pullback. As the market gets closer and closer to all-time highs, I'm going to get more and more bullish on this. If we can get over 8, 23.8 right here and hold. All-time highs are here. And again, check out Top Step. That's what I'm day trading on today, is Top Step's funded account program. No PDT rule in futures. Get you around the PDT rule. Very similar to day trading stocks. No PDT restrictions in futures. No PDT rule in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Patterns are very similar to day trading stocks, but there's no PDT restrictions. You can track payouts in their dashboard. They're one of the most reliable funded account programs for payouts. Even people who don't use them will admit that most of the time. No PDT in futures, S&P, NASDAQ, Dow, Russell, gold. You can day trade very similar things to day trading stocks. Get you around the PDT rule. And most day traders lose money, so it just makes sense to do this instead of risking thousands of dollars funding your own account, which makes no sense. You're probably going to lose your first couple accounts in the futures market and in the stock market. So try this first. It makes more sense. I'll put the link up. They're a sponsor of mine, though. I'm biased. But again, if you want to check them out, here's the link. You can also see it pinned to the top of the chat. Right, so now we're dipping down a little bit after a couple good green trades. I might add one contract to this just because it's still pretty small. Didn't have time to add. I tend to think we're going to get up here, but we're too close to the all-time highs to not have a push, I think. But I could be wrong. There's variance. There we go. My entry holding support. We're going to add to this. Take a piece off up there if we can get it. All right, we took a piece off. Riding this up now too. I don't know if I really like this entry. I'm gonna cut it right here. Wait for a dip now. 800 might hold though. We've done pretty good since the opening bell though, honestly, so. Till right now turning all the way back down. It's at $1 a share. I see you, Corey. Have a good day, bro. My dip buy? I think so. I'll add to it. All right, we got 3, 4 contracts here on this dip. Let's see if we pop. A little risky, but that's okay. We're retracing back up now. Dip's getting bought up big too. I'm trying to take some risk here today, but like kind of going back and forth. It'd just be a huge fake out into all-time highs. Yikes, this is news driven. Some type of catalyst just happened. We lost some money there, but it's alright. Let me see if I can figure out what catalyst it was. I mean, look. Gotta be some catalyst for this big move. Seven minutes ago. It's not the MOO balance. Yeah, I'm gonna run away from this pullback for sure. I'll probably just wait in this account. Like, we lost some in this account, so we went back and forth, but ended up down on the day in this account. It's all right. That's a big pullback here. And again, it kind of faked a lot of people out, I think, getting so close to all-time highs. Like, we're right up here. All-time highs are right here. So I don't really knock the trade. We were trading micros, so it's not the end of the world, but you don't love to see it either. I'll put it that way. Let's see if this gets bought up too. Yeah, I'm still watching that all-time high level. I want to see if we get it. I don't see anything. It could have just been a big fake out sell-off. Let me see. Okay, so the president said Powell must now lower rates, considering lawsuit against Powell over Fed building costs. Too late, Powell must now lower rates, considering allowing a major lawsuit against Powell. Yeah, I think buying the dip would probably work. I just don't have any more risk on the day to take. So, it's all good. Yeah, let's see if 760 holds. I'm going to start playing it only at my levels now, too, on my other account. But I am also going to slow down a lot, just because some days are just not good to keep pushing. I don't want to destroy my account, you know. I think some days are good, some days aren't. And I think we're getting a lot of big movement, a big candle. This big candle's strange, too, for a not fundamental catalyst candle. It's strange. Yeah, I'm looking at Bitcoin right now, too. I mean, I agree with them that Powell's got to lower rates. I do agree. I'm going to take some profit in my United Health trade a little bit as well. UNH is ripping up. Yeah, so UNH is ripping up. You know what? Actually, I might just sit on this longer term. I'll take a little bit off here. Just a little bit in UNH. We just took a little bit off. Because it's up so much. What else am I in? We took a little bit off of HIMS. PayPal up significantly since the bell, and we're now green on the day. That's good. Again, I think this is one of those situations where you got to watch the market for the rest of the day. Is the music too loud? I could change it. Let me know. I'll turn it down if you guys want. There you go. Yeah, Nvidia breaking down. It's at 181s. Yeah, I mean, I'm watching for all-time highs today, but I'm not really going to attack either direction here. Like, we got CPI. We got kind of competing news stories. We got the China news regarding them telling companies not to buy Nvidia chips, which is bad, of course, which is dragging the market down. And then we got good inflation data, increasing the odds of rate cuts a substantial amount here. So if you take a look at rate cut odds, they're at 94 and almost 95% right now. So 94.4% is what I'm showing here for rate cut odds for September. Only 5.6% chance of a pause now, which is good and I think optimistic for markets. But we also don't know which way the market's going to go if we do cut rates. I think something we might see is we might see a sell-off today. And then if we get more confirmation in rate cuts next month, we're going to start to see the market getting baked into rate cuts, potentially on the upside. But you never know. You never know. I think their CEO is already kissing the ring, MC, but I'm not 100% sure. You never know. They didn't really detail much from it. But Intel's been beat up as well, so there might be some dips to buy there. I just don't know. We just activated a funded account too. Keep saying activate it. We just did. We already paid the fee. Hold on. Now I'm confused. Yeah. I thought I just paid the fee. Man, United Health still ripping up here. Wow. 258s for UNH. Good dip by there. Kind of shows like that wait for a big dip after earnings. Look at UNH here this morning. Get log back in here. Guess I can pay it again. They don't recharge me. Activate, agree. Email. All right, look at this rip. United Health up to 259s. Are we going to get a rejection at the 200 exponential? All right, we're at 259. All right, guys, so we are now pushing up. We're at 259s. United Health at 258.30s here. Now we're pushing up to 23.7s here, 23.7s. All right, so we are down at 23.712s. Nvidia at 181.40s. SPY at 638. All right, we're at 259.30s here for the United Health. Still rip it up. Bad news is on core inflation. Yeah, core inflation was higher than expected. Again, we could have chop. I think it's possible we have chop today. Real estate investment trusts. Can y'all hear the music? You should be able to hear it. Yeah, so you should be able to hear it pretty clear. Bro, so listen to this. I'm reading this email that I got. It's hard to tell whether it's a scam or not. Like, I'm looking at just the view of it. It's from sec.gov. And it's titled, so this is the email. It's hard to tell whether this is a scam or not. It says system at secgov.4 is what it's from. And it's the SEC Enforcement Division. It says high priority. It's hard to tell whether this is a scam or not. But when I look at it, and luckily the attachment, I'm not going to download the attachment. That doesn't make any sense. I'm just going to preview it. All right, guys, look at Nvidia break it down. But it's not me. It says potential witness. It says the SEC Enforcement Division conducting a federal investigation into blank. But it says it's a cryptocurrency exchange. I don't really promote any crypto exchanges, though. You know? So, I don't know what it wants from me. It could be a scam. No, that's what the first thing I checked was the domain name. And it says SEC Enforcement Division system at secgov.forum. So that seems legit, but it's hard to tell, right? But it went to my spam accounts. Look at the NASDAQ breaking down. Yeah, it's probably a scam. I'm not reading it. Hey, what's up, bud? How you doing, man? Let me guess. You want to play games right now? Okay. Go ahead, bro. All right, love you, buddy. All right. Yeah, so we're breaking down. I don't feel comfortable enough shorting this right now, to be honest. The only thing I know is that the levels I draw can work. I mean, look, school's about to start for my son. I don't want to be too restrictive on him. I'm going to let him play games before school starts. Because once school starts, he's going to be severely restricted from playing video games during the day. All right, Nvidia up to... You know what? This is where I don't know. I could buy this dip. Wait, is this the one with lyrics? Yep. Yeah, it's very strange. They've got to be spoofing the email address. Either way, I plead the fifth. All right. Like, I ain't ratting on anybody, dude. I don't even know what they're talking about. I don't know anything. Okay. Lawyer, you know. But they're probably a scam anyway. But even if they weren't, dude, I'm not ratting on anybody. Lawyer, you know. That's all I'm saying. All right, NASDAQ still flushing down here. CPI was 3.1 versus 3 or 3.1 expected. So that core it was core CPI, so it was roughly flat. Regular CPI came in at 2.7 versus 2.8% expected, so a little bit better there. And then listen, I'm not one, listen. If one of my friends does something really stupid and somehow they make me an accomplice for it, and they're like, yo, we're going to give you all this time, bro, I'm singing, okay? Like, you're not going to keep me from my family for some dumb stuff that you did, bro. You know what I mean? And that's a dumb standard. Nobody would. Everybody pretends like, oh, I'll be solid. Like, nah, man, you're ratting. I'm ratting. Everybody's ratting, you know? And so, but if they just want me as a witness, oh, I don't know anything. You know, Yeah, I don't know if the market's allergic to good news. What this shows is that the market fears the China restrictions for Nvidia chips. China's discouraging companies from buying Nvidia chips, and I think the market is digesting that news. Now, although I do think we're going to rebound. I do think we're going to rebound. So, he could be whale shorting the market. This candle was strange to me right here. Like, this candle right here is very strange. That's the one that got me this morning. I'm down hundreds because of that candle right there. And it's super, like, difficult candle to make money, and I'm sure it trapped a lot of people because we're pushing up towards all-time highs. Like, here's all-time highs. So we're going up there, and then boom, just a huge candle down. And then that kind of restarted the bearish momentum. Yeah, well, this is where it says it came from. Like, look, I'll show you the email header. Hold on, where'd it go? Check it out. Like, look, it kind of looks legit too, which is why I'm like, eh. And if it's a crypto platform, it's kind of plausible that, like, they're doing some dumb stuff. I don't know which one it is. I never really promoted crypto, really, not like that. I've had a couple, but where's the delay? Here it is. Look. Yeah, it's the last few days of summer. I'm gonna let them enjoy it. United Health still rip it up. Yeah, no, I'm not clicking on anything in this link. If they want me as a witness, they better give me some paper snail mail. I'm still not gonna respond to it. I'm gonna act like, you know, I mean, I don't even know what this is talking about. I don't even know who this is. Yeah. Yeah, I'll report it. That's probably what it is. What my guess is that it's somebody created an account that looks like the SEC on a form and then used that to email me, you know. Okay, let me report this as spam. Yeah, we just reported it. Also, other scam email news. Apparently Logitech wants to sponsor me as well, guys. You know, apparently Logitech. Shout out to Logitech. All right, guys, United Health at 262. Yeah, Aquafina for life, okay? Yeah. Doritos, too. That's right. All right, guys, so we're starting to rebound back up. Here, let's see what we get here. I'm waiting. I'm trying. Hey, congrats, MC. Yeah, my wife has the BRCA gene, so. All right, guys, we're at 262s. I don't know. Logitech ain't sponsoring me, bro. It's better than, listen, it's better than Aquafina. Okay. Like them trying to claim Aquafina's trying to sponsor John at beginner trading. Like I'm gonna start selling water bottles. Like, hey guys, don't buy your water bottles from Walmart, right? Let me like buy your water bottles from me. Freaking ridiculous. Doritos. Don't buy Doritos from the store. Buy your Doritos from John, right? Like they're trying to get people that are just so desperate for sponsors that they just ignore all the red flags, you know. Hey, good luck, Yowzer. Dude, United Health is just pumping up, dude. PayPal is too as well. Very green on PayPal. Look at PayPal. A little bit, like a little piece off here. I don't want to risk too much. Where am I at on PayPal? Might take a little bit more on PayPal too here. Hold on, let me see. All right, guys, again, if you haven't already, check out Top Step. Beautiful way to help support the channel. No PDT, where I'm actually going on Top Step X today, later on this morning. Or no, later on this afternoon. So I'm going on Top Step X today, this afternoon. Yeah, let's take a look at rate odds right before we close this down here. CPI inflation data, higher than, as expected. Odds of rate cuts have increased to 94.2% as of now. Very good for rate cuts. Odds of rate cuts up big. No PDT in futures. Check out Top Step if you want to help support the channel. You can day trade for 50 bucks a month. And if you pass it, you get a 50K funded account, 90% split. If you fail it, you lose 50 bucks. It's not the end of the world. It's just a great way to learn. Most day traders lose, including here, but it's a lot cheaper to lose here most of the time. They're a sponsor of mine. I'm top 3 most biased ever. I get paid by them. So, of course, I am biased. A lot of people complimented the channel, said we're the greatest channel for economic reports in the world. And I truly believe that. Thanks so much. I appreciate it. We break it down here live. Hit the subscribe button, hit the notification bell. Thanks so much. We'll see what the market gives us for the rest of the week. I tend to think the market's going to head back up and break all-time highs, and that this is just a temporary fake out just because of the good economic report. And we got PPI inflation data on Thursday. So remember, usually it's back-to-back. Sorry, dude. I haven't even opened my Discord yet today. We almost had 4,000 here at 8:30, though. Oh, yeah. Okay. Yeah, you're right. All right, guys. So again, let me know if you're red or green today. I'm pretty red, to be honest. I hate to admit it, top 3 worst ever, but I'm pretty freaking red now. You don't love to see it. Let me know if you're red or green. And yeah, good luck, guys. As soon as I close this stream, it should bring you to the next one. So if you want to sit around for the next stream, you can. Again, I'm going to redirect this one. We did reject. Hey, listen, to make my money back, I'm just going to start playing these levels. Look at this 720 level I have on the chart. Look at the rejection here, here, bounce here, here, here. A lot of confirmations in my levels here. United Health still surging up. And yeah, we'll see what happens. Green, red, green, green, red. Listen, I don't need sponsorships at all. Hey, thank you, 2A. I appreciate it. tried to take some risk for inflation data, but maybe today wasn't the day for that. I tend to think we're gonna bounce back though. Who freaking knows? Yeah. CPI print. I also think YouTube changed how views are counted now. Alright guys. Hey, I'm gonna get out of here. Y'all be safe. As soon as I close this down, it'll bring you to the next stream. Yeah, I see that. I see he's threatening to sue Powell. Yields are actually elevated now too. Look, real quick before we close this down. Look at yields. They're kind of up relative to the CPI report. Interesting. So maybe that, and again, here's the CPI report. So yields actually spiking here, which is interesting. Originally, they decreased right here, but they spike, which shows a higher interest rate sentiment, especially in like mortgages and stuff. So we'll see what happens there. Again, y'all be good. I'll see you guys later.